regarding the Fed. Lael Brainard, Vice Chair of the Fed, making some comments. Steve, what do we have?
Yeah, Scott, in line with some of the hawkish commentary that's been out already this morning, Brainard saying that policy should be restricted for some time. Here's a quote from her speech that she is giving at this moment. Quote, "We are in this for as long as it takes to get inflation down." So no looking over her shoulder there for Lael Brainard, the Vice Chair of the Fed. She says it's going to take several months to be confident that inflation is indeed moving back down towards the Fed's 2% target. Important, though, to avoid the risk of pulling back too soon. And the Fed must defend what she calls the inflation expectations anchor. One perhaps dovish comment that I wouldn't go too far, where she said there is some concern about the risks of over-tightening, but that does not appear to be an immediate concern. Disinflation will be helped in the U.S. by weakened demand, both here in the United States and tightening in many other countries, as well as what's been happening in Europe overall. Interesting comment here that, according to Brainard, there is scope for profit margins in certain industries where profit margins are especially high for them to fall, and that could help reduce inflation. Finally, she's saying labor demand is exhibiting continued strength at odds, Scott, with some of the weakening economic numbers that we've had.
You likely can't see the movement in the stock market as you were talking, Steve, but it was moving higher. And even as you said, take it maybe with a grain of salt, my words, not yours, on this some concern of over-tightening. Steve, there is, in corners of this market, a don't believe the Fed rather than don't fight the Fed mentality, simply that people just don't believe that they're going to be able to tighten as much as they act like they will. They don't believe the hype.
Those people can send me a check, Scott.
All right, let's Jim Lebenthal make it out. Steve or Steven? What do you prefer on the check?
Steve is good. Steve is fine. Quicker, less time.
All right, good stuff. Steve, thank you.
Sure.
But Bryn, let me go to you on that, because I mean it seriously, right? You do see the market tick higher. Leisman reads line after line after line of hawkish wording from Brainard, and that one line, is that what we're hanging on? There are those who do believe that they don't believe the Fed and what it says.
I think you're so spot on. I mean, I've been saying all year, as long as a lot of people don't fight the Fed, but I think you're so spot on, because I question also, do I believe the Fed is actually going to do what they say they're doing? Because remember, the Fed has three tools, right? They can raise or lower rates, quantitative easing and quantitative tightening, and their words. And I think the market, people that are saying don't believe the Fed, are saying they're just using those words to jawbone the market because the markets were running up and they want financial conditions to stay tighter. So I definitely think that's something that people have to take into question. But we'll see, right? Because she said very clearly, we've got to wait a few months to see. So that would mean that they're actually going to not change their pain trade until like November or December. And I think that's really still of question.
Yeah. I mean, clearly, I think it's okay. The market's okay with the Fed, doing what they're going to do, raise rates. I mean, they're going to raise this month, and they're going to raise in November or October, November, December, or whatever. I think the market's fine with that. It's come to grips with that. It's just not going overboard is maybe helping stocks, Liz. Is that sort of the mentality of why some just don't believe what the Fed says, regardless of how spooky it sounds?
I think the main reason people don't believe what the Fed says is because the Fed is not very good at projecting what's going to happen a year out. I think their words are probably pretty good at projecting what they're going to do at the next meeting and maybe the following meeting, but that's about it. Because if the data changes, we all know they're going to change their tune. The other thing I would say is that fighting inflation is what they need to do. So as long as they keep sending that message, there's a chance that we avert recession. Because if we didn't fight inflation, if we let inflation go on its own, we would for sure be in a recession. We wouldn't be here debating whether or not it was going to happen. So they do have to do that in order to give us any chance of averting it. It's just a matter of if they can do it without breaking the rest of the economy.
Jim, I mean, you're sort of been hanging on this idea that, they're going to go 100 more basis points, right? 50, 25, 25, and then they're going to stop, or they're going to wait and see. And they're not going to either be able to raise as many times as they say, or the economy is going to have enough of a cushion that even if they continue to raise, we come from such a strong base, it's not going to matter materially in the big picture.